All right, guys. Good morning. Good morning. Hope you guys are well today. Today we got the Jolts job opening report. Bitcoin crypto down. Mortgage rates came in at 6.76% for 30-year. Yeah, I'm looking up the crypto news right now. Yeah, I'm looking up the crypto news. Hold on. Chad, help me out if you know what's going on. Somebody's selling or dumping Bitcoin is what they're saying. Yeah, so basically, a lot of people saying it's the Jim Cramer effect. Yeah, I don't know. Here's Bitcoin right here. So Bitcoin falling. So who do you think is selling? Yeah, a lot of people asking me for news. I don't know what's going on. It's gonna call the wonder. So I don't know why Bitcoin's falling. I'm looking at it right now. I can't figure it out. Somebody's selling. I don't know who it is. I'm looking at news. I don't really see any news or getting reported about it. Okay, so this is why. I figured it out what it is. And so I figured out what it is. So Matripox predicted that the SEC is going to reject all spot Bitcoin ETFs in January. So again, they're saying here. I'm gonna get rid of. I'm listening to other music in the background. Yeah, here. So basically, Matripox is saying that they think that the SEC is going to reject all spot Bitcoin ETFs. And so again, I'm going to read this. This is Matrix Port. I'm sorry, Matrix Port. They put an article out saying, quote, why the SEC will reject Bitcoin spot ETFs again. Executive summary, and again, I'm quoting from them. This dropped this morning. Quote, Matrix on Target has been bullish against consensus expectations in 23 and predicted earlier in the year that Bitcoin could reach 45,000 by Christmas. We even expected that if all the SEC requirements for Bitcoin spot ETFs were fulfilled, Bitcoin could rally towards 50K by the end of this year. While we have seen frequent meetings between the ETF applicants and the staff at the SEC, which resulted in the applicants refiling their application, we believe all applications fall short of a critical requirement that must be met before the SEC approves. This might be fulfilled by the second quarter, but we expect the SEC to reject all proposals in January. The current 5-person voting commissioner leadership critical for the ETF approval of the SEC is dominated by Dems. SEC Chair Gary Gensler is not embracing crypto in the U.S., and it might even be a very long shot to expect that he would vote to approve Bitcoin spot ETFs An ETF would certainly enable crypto overall to take off, and based on Gensler's comments in December, he still sees this industry in need of more stringent compliance. From a political perspective, there's no reason to approve a Bitcoin spot ETFs that would legitimize Bitcoin as an alternative store of value. And since traders started betting on an ETF approval in September, at least $14 billion of extra fiat and leverage has been deployed into crypto. Some of these flows might be associated with easier macro conditions as the Fed has turned dovish. However, of the $14 billion of additional longs, $10 billion might be related to the ETF approval expectation. If there's any denial by the SEC, we could see a cascading liquidation, as we expect most of the $5.1 billion in additional perpetual long Bitcoin futures to be unwound. End quote. And so again, this is all quoting them. Honestly, guys, I'm gonna just be real. I've been saying this over and over again. How many times have you guys heard me say this exact same thing? I've been saying this for months now. If the SEC does not approve this Bitcoin ETF, crypto is going to super dump. I've been saying this over and over and over again. It's just an obvious thing. Everybody's betting on this approval. They're acting like it's for sure it's going to happen. And I think it could happen. I think the argument against what Matrix Port is saying here in crypto, the argument against it is that BlackRock very much is a government entity. And so if BLK thinks that they're going to approve this Bitcoin spot ETF, it's pretty probable, that they're going to approve it. It doesn't mean it's 100% though. And if for whatever reason the SEC rejects this and doesn't approve it in January, this month, in a couple days, Bitcoin again is going to super dump. I've been saying this over and over again. That's the biggest risk you got in crypto right now. Everybody's acting like it's a for sure thing, and it's not. I think you have to look at the other perspective, brother. I think one of the things that I'm seeing, and again, fearful when others are greedy when others are fearful. I think that there's a lot of greed going on, basically expecting the Bitcoin ETF to just automatically get approved. And I don't necessarily think it's like that, man. I think that there's a good chance that it doesn't get approved, and if it doesn't, Bitcoin's going to fall. And I hope I'm wrong. I really do. But I've been saying this for months. That's a black swan scenario where the Bitcoin ETF does not get approved and Bitcoin falls. And I think that's a very obvious thing. I think it needs to get approved, I want it to get approved. I think it will get approved, but I think there's also a shot that it doesn't, and I don't think we should act like it's just 100% guaranteed. Alright, guys, so y'all can hear the music, right? Dude, chest pain, man. Whew. John, is the opinion of Matrix Port important? Not necessarily, but the overall thesis is, all right, it doesn't matter who says it. I don't know. I don't know who Matrix Port is. I really don't. But I don't think it matters who says it. I think it's possible. I'm not gonna say it's plausible. It's probable. I think it's possible. And I think if it's possible, you have to understand, like again, I want the ETF to get approved. I think Bitcoin market needs that for sure. I have a crypto channel. Obviously ETF approval is good for my crypto channel. It's a very self-evident thing. And so of course I want it to get approved, but I don't think that we can just look at it incredibly one-sided and just say it's automatically going to get approved. I don't think that's necessarily safe. I think that we have to look at it from both sides, and one of those sides is if it doesn't get approved, what happens? And I think it super dumps, Yeah, for sure, Sam. I'm just calling it that. And again, it's all good, brother. It's all good. I hope we can have opposing views and everything stay cool, man. And you're always, you should, I'm sure you'll be pretty understanding about it. So it's all good. But like, I think that we have to look at it in terms of expectations versus potential reality. And I think everybody's expecting it to get approved. This is the first post like this. And I feel like I've been one of the only people telling everybody, hey, if this ETF does not get approved, it's not spreading FUD. It's just the reality of it. If the ETF does not get approved, with how many people are expecting it to just be an automatic approval, I think there's risks, And I think what happens is you get a lot of people that put a bunch on Bitcoin right now, and they're nervous, and I get it. Yeah, no, you're good, Sam. It's all good, bro. But yeah, that's the reason I call it that, is because I think that it's so overwhelmingly expected that it's approved, that if for whatever reason it doesn't get approved, stuff could go a little rough for Bitcoin. All right, team. Conor McGregor giving a warning. Never mind. All right, team. All right, so sorry, just got to reading up on the latest news. All right, catch it back up on chat. Maybe they're playing no SEC approval, but crypto regs get better. Big boys buy the dip, and the rest of us are left scratching our butts. Maybe, possible for sure. The only reason Bitcoin ETF wouldn't get approved is if someone with bigger pockets says don't. Right, but isn't that very plausible? Like, okay, I'm gonna let's talk about some stuff. So, number one, there's some very obvious things, right? Number one, banking rules the world. You know what I mean? The private banknote system is, the system that the most of the world uses, run by the richest people in the world. There's a lot more that goes into it than that. Every time a president has tried to take us off of a private banknote system, something bad has happened to him, right? You have Lincoln with the greenbacks. You got JFK. Weird stuff happens when you mess with banking. And one of the biggest potential threats to banking is cryptocurrency, in my opinion. You know what I mean? Because you don't need a bank teller with smart contracts. Like, you don't. Like, there's a lot of replaceability there with crypto and banking. And so I'm sure some of the big boys do not want crypto to be, to gain more use over time. But there's also the other argument of that maybe the big elites have already gotten into crypto and they already front loaded into it, and so they're already expecting it. And I think that's what a lot of people are so optimistic about the Bitcoin ETF's approval, because of again, BLK is basically, another arm of the government. And so with that, that's why a lot of people are expecting an automatic approval for this spot Bitcoin ETF. And again, we'll see what happens, but I think it's possible. Yeah, and maybe that's true. The other argument is like whether they're going to get rid of whether they're getting rid of cash altogether. You know what I mean? I think cash is something that is very obviously on its way out. Like, I don't have any use case for cash. The only time I ever need cash is if my daughter comes to me asking for money and I don't want to give her my debit card. But at this point, my daughter basically walks around with my debit card anyway, or my credit card anyway. And so I don't even give her cash anymore. The only time she ever receives cash is when somebody gives her a gift at during the holidays. So it's like, it really is something in which cash is almost obsolete. I think a lot of people are recognizing that, and I think everything's going to be digital in the next 10 years anyway. They're even talking about getting rid of pennies because inflation has happened so much that, like, Jim Cramer said you can't kill Bitcoin, and it's here to stay, and now Bitcoin's down huge percentages. AMD and other microchip stocks falling down some here, team. Is it time to buy up some dips here? Speculation is it was already pre-approved behind closed door. Why would BLK apply now? They wouldn't unless they knew it was time. 100%. But I mean, you have to think of the competitive nature of it as well, though, Blaze. Like, if BLK is the most successful fund in the world, right? If they think that the chance of a potential rival is going to get pushed higher and become more successful, they're going to want to be on the forefront of that. And so they're going to want to put in an application just like their rivals, essentially, And so there's some arguments to why they might do it, even if they're not sure they get approved. I think the BLK one has the best chance of getting approved, but it doesn't mean, Yeah, and everything's mostly down. Tesla's down. Oh, I did get funded on my third account yesterday as well, guys. If you want to see my graph, I don't think I had any losing days. Again, you can kind of see this just to show you. I got funded on my third account today. I've only really traded on one of them, though, so, like, You know, you can see, congratulations, you passed your combine and earned a funded account. We will contact with you within the next days. So that's nice. Yeah, but let's take a look at this account. So yeah, we got funded. Here's the one I passed, if you want to see my graph behind it. Yeah, so we didn't have any losing days. We got funded in 3 days. I wanted to be funded in 2 days to show people on my video that you could, but there was a glitch where they had to give me my account back. But yeah, you can kind of see, first day we made about 1,500. Second day we made 300. Third day we made, you know, about, yesterday we made a little bit over that. But yeah, we hit it. So, and again, I always tell people they're going to give you some room, but yeah, we caught it. Larry Goldman says Tesla will drop to 85. I think that's very, very unlikely. Very unlikely. All right, so there's Bitcoin. We've talked about Bitcoin's weakness today. Here's the Q. Very weak. Q all the way down at $400. So we are getting some pullbacks here. Is it time to buy the dip, or do you think this is going to last longer, I guess, team, is what I'm saying. Do you think this is going to last longer, or is it time to buy the dip? Again, today we have the Jolts report. We have ISM manufacturing PMI. There's no maximum time. There's a minimum time of 2 days, Jay, but there's no maximum time. Yeah, and again, I don't even know how much I'm going to trade on this funded account. Again, I've got 3 now. I've got 3 funded accounts. Again, I tell you guys, it's very simple, team. I genuinely just kind of build up small profits on the day. On my other funded account, we've already had our 5 winning days. We're deep into profits on that account. We're getting ready to withdraw most likely. But yeah, on the other account, we've already had our 5 winning days. So we'll just keep grinding it up. Very big weakness on the S&P right now. And the NASDAQ, I don't know what we're going to do with it. Very nice, Justin. Yeah, maybe after splits, Boba. Yeah, you know, this guy posted about Betterment. If you don't know what Betterment is, it's an investment company, wealth management company. And so basically he was talking about over the last 10 years what his portfolio looked like on Betterment, which is again a financial like analyst or a wealth management company. Betterment only made him 101% over the last 10 years, which is not bad. I mean, it's a little bit over 10% a year, which is solid conventionally. But the S&P over the last 10 years has gone up 237%. 237%. So yeah. So again, I'm a big believer in that a lot of these wealth management funds and a lot of these analysts are nonsense. Like the average person, guys, like again, the easiest way to build a winning portfolio is this. You diversify into all the different major sectors as well as upcoming sectors, right? Of like new sectors like AI and stuff like that. You diversify into all of them with reasonable size in each one. And you sit, and that's all you do. And you dollar cost average if it pulls back. You know, if it starts to dip, you dollar cost average, and you know that portfolio and the S&P and the NASDAQ, or even if you just diversify into blue chip stocks like Apple, Amazon, Walmart, Google, Target, like you're going to do okay. You're going to do okay. I don't know if you're going to do better than the S&P generally, because I think that diversification is powerful. But a lot of people don't realize that. Like paying the bias for a lot of these wealth management companies is simple. They want short-term trades, and I've seen this happen. They want short-term trades because that's where they earn the most commission, is those short-term trades. But the problem is that short-term trades are the least edge you can get in that. With these, again, I told family of mine that were wondering what to do with some money that they had. I was like, look, if it was me, I would buy the S&P, the NASDAQ, gold. I'd buy the S&P, the NASDAQ, gold, maybe some real estate ETFs, and bonds, right? And maybe diversify into a few different bond types, and that's it. And you sit on that for 10 plus years, you are guaranteed to make money almost. Not 100% guaranteed, but close. What's up, San Diego? All right, guys, hit that like button, hit that subscribe button. All right, guys. Data comes out at 10 a.m. today. 10 a.m. All right, congrats, G. We'll be sick if now the SEC. Yeah, we'll see if they approve it. It's getting close. It's getting time. I don't know if it's time to buy the dip or not. We'll see, but. All right, team. So, question. Do you think the market will rebound this week and head back up, or what do you guys think is going to happen? Yeah, Kathy Wood are getting a lot of heat right now. All right. Yeah, this music is a little bit All right, Bitcoin back up to, some reasonable levels here. So Bitcoin's trying. It's trying to head back up. All right, so Nvidia's still at 473s. Is it time to buy the dip in anything, man? That's what I'm kind of looking at. I'm wondering if it's time to buy the dip. Or wait, maybe I should attack this downward trend. I don't know. Mortal Kombat. Yeah, that last song is probably what you're referencing in the Mortal Kombat. Hey, you love it. All right, so we got Tesla bouncing back a little bit. I got the NASDAQ here. All right, so we're going to take a short right now on our funded account. Job is to build up a small cushion first. All right, we're up 10. Give us a little bit more here, can we? Come on. All right, we're up a little bit. I mean, I think the bias is obviously on the downside right now. I think we're obviously downward trending. Boom. All right, so just made a quick little 40 bucks, scalped our first profit on the day, and this is our express funded account. We are up. That's nice. We'll use that to maybe attack a little bit more moving forward, but we are up in our funded account. One green trade in the books, up 40 bucks. We'll take it. Hey, Happy New Year, Tony. Thanks, brother. Yeah, it's just a bunch of different music, guys. Sorry, team. Social media is crazy. They say, somebody said that people who make their beds daily are more likely to become millionaires. Bro, I am not a bed maker, bro. Like, bro, okay, listen to me. All right, listen to me. This sounds like bed makers just kind of pumping themselves up here. All right, listen. Making your bed does nothing. It's a poor use of time. It's just OCD, right? Like, here's my logic. People who make beds are probably more successful, and this is the argument for it. All right, I've got OCD in some areas. Mostly has to do with, like, time. Like, my OCD is, like, time. Like, I want to be on time for things. If I'm late for things, I turn into a tyrant. But this is my argument. I think people who make their beds probably are more likely to have like obsessive compulsive disorder. And I think there is a positive correlation between intelligence and like quirkiness, right? With like stuff like that. Basically, I think sometimes people like that are a little bit more intelligent. Maybe they have worse social skills, and but regardless, I think that's probably what it is. But with that said, I'm going to argue against making your bed. Because again, it's a waste of time. It's a waste of energy. Like, okay, if you're going to go lay back in that bed, last like 12 hours later, why waste time making the bed that you're going to go lay in 12 hours just so it looks neat? Nobody's going to see it. Who's coming into your bedroom? Nobody. Why waste your time doing that? Give me your argument for or against making your bed. Yeah, I'm not saying I agree with it, sir. Again, I'm not a bed maker myself. I don't make beds. Like, again, to me, it's bad time management. Like, why spend 5-10 minutes doing something that's completely unnecessary? It doesn't accomplish anything. You know, there's no utility behind your bed being made except for your room looks neat. And I don't know. Making your bed isn't clean. You know what I mean? Like, your bed's not cleaner because it's made. You know? Right. When I get out of bed, my wife's usually still asleep, you know. Psychological one, I feel you. I get it. I'm not against it. Again, I have OCD. I'm not knocking people with it. I'm just saying making your bed seems pointless. And again, this is coming from somebody who... I don't want to be too specific. Okay, I'll be specific. All right. Let me be specific here. My dad always told me if I got C's on my report card, that he would make me go to summer school for getting C's on my report card. For every grade I got a C in, my dad would make me go to summer school. You know, and he actually did. I thought he was full of crap. He genuinely made me go to summer school if I made C's. And so I remember I made C's in like English, which I'm actually pretty solid at English. I just didn't try. You know, maybe he knew that. But anyways, I ended up going to summer school. At one point, I'm pretty sure my mom and him were going on like some type of vacation or something. But one 6-month period, I had to go to military school for it. You know, I went in Georgia somewhere. And again, I know some of y'all are thinking my parents didn't have that much money. Like, we were middle class. You know, we weren't struggling, but we also weren't like, you know, I'm not like a trust fund kid that had to go to military school, is my point. But anyways, I went to military school one year. And because I got C's, or I think I got D's, and then I had to go to military school. Anyways, and I remember making the bed. And so I had to make the bed. They would flip the coin off of it, a quarter off of it, and it had to be a specific way. So I remember making my bed. But even with that, I still think it's a waste of time. I think it's a waste of time. It's unnecessary. You know, and again, these things, people who do this are more likely to be smart, or people who do this are more likely to be millionaires. I've also seen another one that said that messier people are more likely to have a higher IQ. You know, so at a certain point, I think they're just trying to get clicks. I think these articles are just trying to get clicks, and maybe they accomplished it because now I'm talking about it for 5 minutes. But yeah. I went to summer school almost every year, you know, but one of those years I had to go to military school. And so I remember marching around and making my bed. I did not like it. NASDAQ bounced it up a little bit. I might short this. You know, I've already built up a little bit of profit on the day. You know, and in hindsight, I can respect my dad for making me go to summer school all those years. Because it really did reinforce the material. You know, I knew the stuff when I was done because I had to learn it basically, you know, back to back consecutively. So okay, I feel you, Liv. PayPal gonna crash in the 50s, bro. That's what they were telling me a while back. I'm holding PayPal right now. My average price on PayPal is 51.40s. PayPal currently at 60.50. So again, I mean, that's what people were saying back in the 50s, and you know, they were wrong so far. Bitcoin, what's going on with Bitcoin, Little, is that this Matrix Port company put out an article saying that they did not think that the Bitcoin spot ETFs were going to get approved. They think that the SEC is going to reject all of them. And they put out an article about that. That's why Bitcoin is dumping down, is because this company put out an article basically speculating that none of the ETFs are going to get approved and that they're going to reject all of the spot Bitcoin ETFs. You were taught to make your bed and look how successful you are. There's the correlation. Maybe. My parents weren't the ones that did the quarter one. The military school was the one that had me do the quarter one. All right, so we're starting to bounce up a little bit. Again, part of me wants to short this on the NASDAQ. We're down so much, you know, and when you look at the NASDAQ, it seems like a much bigger move. Like, look, you think it's a much larger move, but it's really not. Like, so you can see the actual Q down here, which is the NASDAQ price action. And you can kind of see how small this range is zoomed in on the left, zoomed out on the right. So again, I kind of want to short this because it looks like kind of like a bull flag or a bear flag, I mean. All right, so we're short. We got a cushion on the day already, so that's nice. I'd love to see a flush. All right, so we just scalped a little bit more. Again, we're starting off the day, so we're trend scalping. So far, we're up this in our funded account. Starting off the day, building up a cushion. We're scalping a trend. Yeah, it was actually pretty messed up how my parents did it growing up. I mean, like I said, I can't complain. And I look back and I can actually respect my parents. Not for the military school thing. I still think that was pretty much useless. But the summer school thing I can respect because they were trying to push me to do better. And so I can appreciate it now as a parent. But as a kid, I freaking hated it, you know. But anyways, we'll see what the market gives us. Bitcoin's starting to bounce up a little bit. But yeah, my parents basically told me we were going to go on vacation. And so we went to Georgia. And then when we got there, they were like, oh, you're going to military school. I was like, man, messed up. All right, NASDAQ, we're going up to 16.6. The moves this morning before 10 a.m. will be minimal and choppy at best. Real money will move after those reports go live, but I still expect we're in for a big dump around 20%. You think we're going to drop 20%? I don't know if we're going to drop that much. I think we might correct a little bit because we're up a ton. But I don't know if 20% is really, that's a lot. 20% is a big percentage. If we drop 20% short term, that's going to be considered a stock market crash, technically. So I don't know if we're going to do that. So we have the FOMC minutes report today. So the FOMC minutes report is not an actual Fed speaker, but it's a recap of what the Fed did during their last FOMC meeting. Yeah, I don't think we're dropping 20%. From everything you've said about your parents, sounds like they were stern on you and it contributed to the man you became. Yeah, I mean, like I said, as a parent now, I can appreciate it. If they didn't care, they wouldn't have done anything. You know what I mean? So I can appreciate it as an adult. Again, as a child, I freaking hated it. But in the end, I think that's kind of the point sometimes, you know. All right, so I should have shorted this. Look at this big dump down here. I should have shorted it. Overheated, needs to have a correction. Yeah, potentially. I don't know. We'll see. The market's just correcting back down some. Ah, man, I should have shorted this. We had that double top right there. Still a little disappointed I didn't, but that's okay. In 2022 bear market, it was 25%, so 20% is a lot. Yeah, but again, so just to put this into perspective, right? So again, we put a weekly chart up. The only reason this wasn't considered a crash is because it was longer term, right? It was just a bear market, like you're saying, for 2022. So this was not considered a crash because, again, it was just a bear market into that. So not a crash, more so called a correction. A crash would be much shorter term. So a crash would be like if in a couple weeks we just did like that. You know what I mean? That would be the difference between what happened, which was a longer term downward trend, i.e. a correction, versus a crash where we just kind of dump really quickly. But yeah, 20%, I think the number that what's considered technically a stock market crash is if we drop, I think it's like more than like 10 to 15% in a couple days. You know, there's also, though, there's volatility restrictions in the market. So I think if the S&P drops around those percentages, it gets halted for the rest of the day, I think. I know one of them, it gets halted for a certain amount of time. And then if it does it again, let me see. S&P halt conditions. All right, so yeah, so micro S&P, E-mini, a regulatory halt pursuant to New York Stock Exchange Rule 7.12 was enacted in the cash equity market due to a 7%, 13%, or 20% downside move in the underlying S&P index relative to its previous closing price. Okay, so if the S&P drops over 7%, we get halted. 13% we get halted. 20% we get halted. I think one of them, stops it for the rest of the day. I think if it drops, I'll have to look. I'm sure the chat's probably answering this. Let me look in the chat. Yeah, after 2 halts, the rest of the day is closed. There you go. Yeah. So that's what I figured. So after a certain point, they halt it for the rest of the day. Really, like someone says the ETF is not going to get approved and it drops. Yeah, but that's all crypto really is. Yeah, 100%, Mark. Like I said, I can respect him and appreciate him, you know. Alright, so we're under 400 on the Q. I still kind of bummed. A little bit of FOMO. I didn't short. I wanted to short it, but it's all good. Here's Tesla. Tesla down to 244s as well. Bitcoin up 2K from the dip. What's up, Chef? What's up, Pete? I wonder what happens if you're in a position while it halts. What happens? So if you're halted while you're in the position, nothing really happens. You can't sell when it's halted. So a lot of the time, penny stocks get halted as well, right? So I've been in a lot of those situations in which I'm day trading a penny stock and they get a circuit breaker, a volatility halt. Basically, they freeze all trading on it. The time frame of those halts is anywhere between like 5 minutes to 15 minutes. I've seen 30-minute halts as well, but most of the time they're 5 minutes, right? So you'll be day trading. Like, again, the only real example I can use from experience is penny stocks. So I'll be day trading a penny stock. A lot of the time it'll happen on penny stocks like when they break highs. So if a penny stock breaks highs and volatility shoots in and they get so much volume, sometimes they'll halt that stock and you have to basically wait 5 minutes for it to resume trading. Most of the time, a lot of people are stuck in it. So when it gets halted, a lot of people are stuck in it. So what happens is you get this gold rush where when the penny stock resumes, everybody starts to unload a lot of the time, or sometimes you even get more buys showing up. It varies halt to halt. But most of the time, everybody starts to get nervous because it's kind of like it snowballs and everybody wants to get out because they couldn't exit over the last 5 minutes. And so that'll like crash the penny stock a lot of the time, or, you know, sometimes they'll break highs and go crazy. But yeah, if you get stuck in a halted stock like the S&P, you're just gonna have to wait to sell. You're not gonna be able to sell it until it resumes 5 minutes later or whatever period they halt it for. Crypto is halted because this company Matrixport put out an article saying they think all the Bitcoin spot ETFs are going to get rejected by the SEC, specifically because of the SEC's bearish stance on crypto, with their chairman Gary being pretty pessimistic and against crypto overall. Rivian. Yeah, Rivian's had a tough time. It started to dip yesterday. Rivian production numbers came out yesterday that were underwhelming. All right, so on December 18th, NKLA founder Trevor Milton was sentenced to 4 years in prison for security fraud, referred to as the Ocean of Lies, in September of 2020. If you don't remember this, what NKLA did was they were building EV semi-trucks. I remember this. So they were building EV semi-trucks. I don't even have to read this article. So NKLA was building EV semi-trucks, like 18-wheelers. And what they did was during a marketing video, and there was a lot of other stuff that came out, but during a marketing video, they pretended that the trucks were functional in using electricity. They pretended that the trucks were functional, but what they were really doing was pushing the truck down a hill and then videotaping the truck going down the hill, implying that the trucks were running. And that made NKLA stock shoot up initially until everybody found out that it was all a lie. Again, they titled it the Ocean of Lies scheme. Again, they were pushing the truck down a hill, basically, and pretending it was driving. This might be fulfilled by Q2, but we expect the SEC to reject all proposals in January. Yeah, I did read that. You know, you got to really question those. Like, okay, so this company Matrixport, you got to question, are they putting out, like, I think it's very, very possible that this company is taking big short positions in Bitcoin and then unveiling this article. You know, I think that's very possible, where they're kind of insider trading a little bit, where they're putting out big short positions in Bitcoin and then they're unveiling that article and scaring everybody and then profiting from it. I think that's very possible. So once you pass it, they eventually you got to pay your activation fee. It's a one-time fee for the account, and then within a couple days, usually they'll email you your logins. No, it's not Rivian. It was NKLA. Yeah, and their guy just went to jail for fraud. Hey, what's up, Jonathan? The quicker we crash, then recover can start. Yeah. Yeah, so I'm watching Rivian and some other stuff bounce up. I see Tesla. We also got to look at the Q here, I think. Here's the Q. Q bouncing right up to $400. I was thinking about shorting this, but again, I'm late again. All right, guys. What could be the direction of Euro USD and ISM PMI? I'm not sure, so I don't really watch Euro USD. Does it move? Let me see. Let me see how this moves. So yeah, this looks like it moves a lot like the NASDAQ. And so it depends on what happens. You know, it really, manufacturing PMI is a much more nuanced thing. Specifically, ooh, man, I'm kind of sore. Specifically because, okay, you got to think about it like this. Powell says the job market is too resilient, that the job market has been too strong lately, and that's a bad sign for inflation problems. You know, so like that's something that Powell has been very outspoken about, saying, hey, the jobs market is too resilient. We want a weaker job landscape, basically. And so today with the Jolts report and manufacturing PMI data, I think it's going to be something in which, number one, I don't know exactly how we're going to respond to this report. I really don't know. I think it could really genuinely go either way. And I don't know how this thing is going to act. I don't know how this thing is going to behave relative to what numbers show up. But I think that it's possible that a weaker job landscape makes the markets go up, including Euro USD. I think it's possible. It doesn't mean it's for sure. Again, we're just guessing here. But, you know, again, when Powell says that he wants the labor market to be weaker, I think that could be a reaction we get, is if jobs come in low, market goes up. If jobs come in high, market goes down. You know, economic growth could be seen as a negative. So I think that's possible. Bitcoin, man. Big story of the day. Bitcoin down. The rest of the market had a pretty big weakness overnight. Pretty big weakness. Okay, got you, pawn. Sorry, brother. A study from the University of Minnesota found that it's actually messy people who are more intelligent and more creative. That's what I heard, right? And to put it into perspective, I'm very messy as a person. Like I am, I have OCD in some ways, but it's not, it depends on what it is. Like some of it has to do with cleanliness, but it's certainly not universal cleanliness. But I'm very messy. If you look at my office right now, it's messy. Yeah, it's a pretty solid idea. And remember, today we got the FOMC minutes report. FOMC minutes report. Yep. Definitely top 3 messiest people in the world right now. Hey, y'all slap that like button. Hit the subscribe button, team. We appreciate it. We got almost, yep. We got almost 500 people here. I haven't done a poll yet either. Let's do one. Does the market want a higher or a lower Jolts number today at 10 a.m.? Higher? So, again, does the market want higher or lower? How about, let's do a better one. Will the market react positively to a higher than expected Jolts report? Yes, no. These are going to be the two options. Can you become more creative if you mess around on purpose? Yeah, I mean, I'm kind of messy. It depends. It depends on what it is. Some areas I like super neat. Other areas I don't care. The way the market is going to correct a little, so the way I see it, it'll go down another 1 to 3% regardless of Jolts. Maybe not today, but within 1 to 4 week time frame. Maybe. Possible. Yeah. Yeah, it depends, man. It depends. I don't think painting anything with a broad brush is. I'm certainly a messier in terms of like organization around me, but there's other stuff that I'm like really organized, and it just depends on what it is. Depends on how much I'm interested in whatever it is. After building a cushion, what's the maximum loss you're willing to take that trading day? It depends on how much my cushion is. Usually it's a couple $100. It's like my max, right? So usually I'm okay with losing a couple $100, and if I do, I just close it down, and I don't try to push any harder. All right, so we got this little breakup, a little bit bounce back in Tesla. You can also see it in like Nvidia, other stocks as well. We've built up a small profit on the day. Nvidia is slightly over the VWAP though, so I don't know what we're gonna do here. Another 3% today would be a crash. No, man. Again, like, let's take a look at the markets. So, everybody always acting like it's just the end of the world here, man. Let's clear all these out. All right, so we were at 413s. We are now at 403. We'll just round to those numbers, basically. So yeah, we're down 2.4%. 2.4% from the highs of the year. And really the highs of the last couple minutes. So, I mean, you know, we're down. But also, it's not... Oh, I guess we're at 400 right now. So, let's take a... All right, so we're down 3%, roughly. Right around 3%. I don't think that's a crazy shock when the market's up 28% in 2023. What? How much... Let's see. All right, so around 24%. So when the market's up 24% in 2023, I don't think a 3% dip is that crazy. In all honesty, I just don't think it's that crazy yet. I think it's certainly reboundable, but again, we also could continue to fall. I'm not sure, but I just don't think it's like the craziest thing. 3% today would not be a crash. 3% today would be 6%. That's less than half of what we need for a crash. A crash is 15+%. So 3% is certainly not a crash. Most of the experts are looking for 3 to 5% correction. Yeah, I can see that. That 24% you're talking about is, maybe, but it doesn't matter what the reasoning is. Again, I've said this 1,000 times, and I'll continue to say it. It's very simple. The S&P 500 is going to give you on average about 10% a year. And that includes crashes. That includes crash statistics. That includes when the market has very bearish years. And so what does that mean? It means that on good years, the market is going to move up much more than 10%, i.e. last year, 24%. That's kind of what happens. It's statistics. If you think about it from that perspective, 10% average, okay? And you use that to gauge what expectations you might have for the market. 10% average. Sometimes we crash, sometimes we fall. So to compensate for that, stat-wise, you need to move up much more than 10% on the good years like last year, regardless of the reason. Tesla now over the volume-weighted average price, over 245s. The Q bouncing all the way back to the VWAP here as well. Let's see if it holds. Well, it's all relative. The market is relative, Again, Jay, the dollar amount means nothing. I'm looking at the percentage. So far, we've moved down 3% when we're up 24% over the last 12 months. And so, again, you can't look at numbers out of context. You have to look at what's considered a crash and how much we're pushing towards that. A crash is considered 15 to 20% drop in a very short period of time. We're down 3%, so we still got a long way. Is it true some people can make 1,000% a year on a small account? It's possible. It's very unlikely. Most of the time, they're just trying to sell you a course. So most of the time, they're just trying to sell you a course. So just try to be resilient to that. I'm not saying all courses are bad. I'm actually not against all courses. There's some courses that are legit and good. But most of the people pushing you to trade a small account and somehow turn that $1,000 into $100K using their super secret penny stock system is just nonsense. They're just trying to sell you a course. And again, if they told you the truth, which is that most day traders are going to lose money, it's very difficult to make money. Most people are going to lose. Doesn't matter what course you take or who you follow, you're still probably going to lose. If they told you that, they wouldn't get many course sales. And so what do they tell you? They say, yeah, guys, look at my super secret penny stock system. I'll turn $1,000 into $100K in 6 weeks. Just 1% a day, bruh. Tesla going under 50 this week? He's got to be a troll. Under 50, bro, this week? Come on now. So you're expecting Tesla to drop 80% this week, just to clarify. Under 50 would be 80%, basically. We're at 250 right now. So if the math in my head is right, you're expecting Tesla to drop 80% in a week, just to clarify. It's got to be a troll. What's up, Sam? Yeah, you didn't know it was that easy, bro? Just 1% a day, bro. That's what they'll do. They'll get on TikTok and they'll be like, all you got to do is make 1% a day. It sounds reasonable to somebody that doesn't understand the stock market. It's kind of like me saying, hey, guys, go play the lottery, If you just win $1,000 Powerball, if you just win $1 million Powerball a year, you're going to make $1 million a year, It's that easy. I think the snake oil salesmen in the trading education industry are getting weeded out, becoming fewer. I think so as well. Maybe today? Oh, maybe, bro. Yeah, all you need to do is win $1 million in the lottery twice a year. You make it $2 million a year. Easy. Piece of cake, man. Everybody can do that. That's a little bit, maybe UD. I don't know, though. What makes you think they're going to go bankrupt, though, brother? I guess is the question. Saying they will is very definitive. And I'm not disagreeing with you, but explain it. Why do you think they're going to go bankrupt? Let's hear it. Tesla over the volume weighted average price. So is the Q right now. So is the SPY as well. So we're starting to get some upward movement in some stuff. I make 20 million trading every day, intraday. It's easy. What, pesos? I think they will go bankrupt because they've already lost half their value and they have no income. They've lost most of their advertisers. I don't think they have no income. They obviously have some income. But you might be right. I don't know. That's a good argument. To be fair, it's a good argument. All right, so again, we are now over the volume-weighted average price in the Q. Watching that here, the Tesla chart is pulling back to the VWAP and bouncing directly off of it. You can see that bounce there. We'll see if it holds. SPY now back under the volume-weighted average price slightly, but testing it now. We'll see if we bounce or what happens. Yeah, again, I see Teslas everywhere I go. I talk about this a lot. Tesla's obviously doing well. Now, what Elon's doing with his other purchases is a different story. But, again, in my area, I talk about this nuance a lot. In my area, 3 years ago, every time I looked around, I never saw a Tesla. You never really saw a Tesla. You saw a Tesla 3 years ago. Ooh, it's a Tesla. They're rare. It's kind of a head-turning car. Now I see Teslas all the time. They're everywhere I look. No matter where I go, I see a Tesla. Maybe it's just my location, but I see a lot of Teslas. So Tesla as a company is obviously doing well. They're obviously making a bunch of sales. Whether that will continue, I don't know, but they're obviously doing okay right now. Are you covering Fed Barkin speech? No, probably not. We'll watch the market to see if it moves. Choppy inside day, slightly green. I hope so. What about Apple being down over $14? Yeah, Apple is another story in this market for sure. Apple is one of those companies, though, that are genuinely going to be okay long term, in my opinion. So if Apple dips enough, I'll probably buy the dip. Here's a weekly chart on Apple. Apple just broke all-time highs at 199.60, tapped 200 basically. So I might actually buy a little bit more of Apple. I don't mind buying this dip. It's gonna be a small trade though. We'll add all right, so we just added a little bit more to Apple. But yeah, Apple down a lot. But again, Apple was already breaking lifetime highs. You have a point, John, but don't you worry about oversaturation. There are only so many exponential growths you can have. Well, sure. But oversaturation could happen, But it just depends on if Tesla keeps evolving as a company. Any company has to continue to evolve. If they don't evolve, they're going to die. So it just depends on whether Tesla can keep evolving. But again, at a certain point, it's kind of like saying Apple, the same thing. Like, you only have a certain amount of parabolic growth periods in any stock, but it doesn't mean it's going to stop moving up. You can look at Apple, you could look at Amazon, you can look at all the other companies that have continued to move up with it. So yeah, Apple downgrade was one of the catalysts for sure. One thing I can vouch that John is genuine in all the suggestions he gives. They are simple suggestions. Yeah, I mean, I just try to tell people the truth. Now, some people like it, some people don't. The truth hurts in a lot of ways, and it's my truth. So like, maybe I'm wrong. I say some stuff about penny stocks or day trading and gurus, and again, maybe they're just my truths. Maybe I just, maybe I'm wrong. Yeah, but anytime, so if they're able to open up more charging stations, then Tesla will probably go more. Yeah, the biggest argument against Teslas and EVs are the charging station issue. But again, I don't think it's a big deal at all in the grand scheme of things. I think when you zoom out and look at any type of technological growth period in history, you get speed bumps. Like, it's normal. Like, when we replaced the carriage with the automobile, there was a weird speed bump period when you had both carriages and automobiles driving at the same time, and that caused some issues. Overall, it was hard for them to mesh well. It caused some issues back in the early 1900s, and so that's pretty normal. When any type of technological growth happens, you're gonna have speed bumps. It's normal. It's what happens. But again, over time, that's gonna curb a little bit and just go down. Like, over time, it's going to get better and better. They're going to become more efficient at it. Technology is going to evolve in that way, and it's obviously going to be okay, I think. All right, so look at Q moving up. Over 400s again. Apple's still trying. Again, we can look at Tesla here to see what happens. Earnings season starts in a couple weeks as well, guys. So speaking of Tesla, Apple, Amazon, Walmart, Google, earnings season starts. Earnings season really kicks off with earnings season really kicks off with, let's see when earnings season really starts. All right, we get Walgreens earnings Thursday. Yeah, I'm still scrolling here. All right, so we got Tilray earnings on the 9th. Albertsons. Man, Albertsons is still around. WD-40. Oh, dude, my stomach is in freaking knots today, man. All right, so, okay. All the big earnings start next Friday. Not the movie. Great movie. Love Next Friday. Next Friday is actually one of my favorites. I like the original Friday. But Next Friday is kind of, with Day, They're 10s. I keep them clean, though. But yeah, not the movie. But next Friday, we have bank earnings. Really, every earnings season, what kicks it off is bank earnings, right? This specifically happens next Friday. And those companies include JP Morgan, United Health, Delta Airlines, Bank of America, Wells Fargo, BlackRock, and the Bank of New York. Those all drop Friday, January 12th in the morning. And that's going to kick off earnings season into the next week, where we have Tesla earnings. We have, let's see what else we got. We got Goldman Sachs, Morgan Stanley, PNC Financial, Mercantile, FB Financial on the 16th, Tuesday. In the morning, we got Interactive Brokers, Hancock Whitney, Progress, Pinnacle that evening. The next day, Wednesday, January 17th, we have Citigroup, Bancorp, U.S. Bank, Citizens. And then in the evening, we've got Discover and Alcoa. And then Thursday, we've got a bunch of other ones. I'm trying to look at when. Is it Tuesday? When is Tesla earnings? Tesla earnings. Oh, man, they pushed it back. That sucks. So Tesla earnings are now January 24th. January 24th. They pushed it back. Interesting. All right. So, but yeah, that's when earnings season kicks off. And that's basically it for the week. We got some other small companies, Metro Bank. And then the next week, we got United Airlines, Cleveland Cliffs, a bunch of other ones. Verizon, Johnson & Johnson on Tuesday, Coca-Cola, Lockheed Martin. And then we get, okay, so Tuesday, January 23rd. It's actually a little bit different. We get Microsoft earnings. So that's cool. So January 23rd is when the big boys start with Microsoft and Netflix. And then Boeing is the next morning on Wednesday. The 24th, Abbott, General Electric, Hess, AT&T. And then Tesla's the 24th in the evening, IBM. Thursday, we got a bunch of other ones, Dow, Intel, ENPH, Visa. Intel earnings might be big. And then Exxon and oil earnings. All right. So yeah, earnings season starts over the next few weeks. Did you have a carriage or automobile back then? In the early 1900s? Yeah, man, I had a scooter, bro. All right. I had a Vespa. All right. Don't hate on me. They hated gas cars because the exact reason they hate EVs. Yeah. Y'all aren't cultured enough, man. Y'all didn't get my Friday joke. Yeah. Mostly, yeah, again, the reality of it is, right, here's, people hate on EVs, and I understand. I always think we're going to need lubricants. But I think big oil runs the world. And I think that they don't like EVs for the very obvious reason, is that it's the biggest threat to oil. Big oil in the world, obviously. It's something that's very self-evident. But I think the problem is that electric vehicles are simply more efficient. Now, the only argument you get against it is you get two arguments. You get charging and you get producing lithium batteries, right? Those two things, are the negatives of EVs. But I think when you compare those to the positives, which are obviously faster, obviously more efficient vehicles, mesh better with technology, the mileage most of the time is better, and the convenience of EV is better as well, right? Less environmental pollution in terms of emissions as well. So I think there's a lot of arguments for EVs, and I think they're simply more efficient vehicles is the biggest argument. They're just more efficient. And again, maybe I'm wrong. Again, I'm down to debate with you as long as you're respectful in the chat. Maybe I'm wrong, but I think EVs are simply more efficient in almost everything. And I think over time, efficiency wins. And so I think over time, speed bumps are going to go away, and you're going to see better progress with EVs. But maybe I'm wrong. I don't know. Yeah, rest in peace to the dad from Friday, man. Yeah, one of the Fed members is speaking. We do a little bit of everything, man. My TOS account's got like 50, 60K in it, so we trade on that as well. We were green last year on it. It just depends on what the market looks like. Usually I don't really buy up anything. I'm usually waiting for big extended pullbacks to the downside that I start buying dips on. So that's kind of my strategy. Right. I think so as well, Lou. Yeah, I disagree. I don't think other companies have anywhere close to it. The biggest competitor to Tesla is Rivian, and they have Amazon backing, which is good, of course. But I still don't think they're going to beat Tesla. I think it's just going to be hard to catch up for anybody. Yeah, I'm not saying they're not going to be successful. I just think it's going to be hard for them to catch up. You know, Tesla's got such a head start on them. I own an EV, gasser, and a diesel. My EV is without question more efficient so far. Same reliability as Subaru and better than BMW. Yeah. Yeah, I mean, I think that's I think that's the future. I think it's obvious that like that's what's gonna happen. It might take some more. It might take longer or shorter period of time than expected, but you know, I think it's you know an inevitability. I think it's gonna happen, and I think. But I think we're always going to need lubricants, you know. It doesn't mean I think lubricants and oil companies are going to be fine. I think you're always going to need lubricants. It's something that you need to have, regardless of whether anything. You just need lubricants. And so I think lubricant companies are going to be fine. But, you know, and it might take 30 years or more for this to really get ingrained in automobile culture. So yeah, I'm sponsored by a funded account program called Top Step. They give you a demo. They test your skill. If you could pass the test, they fund you. Most day traders lose money. And so, again, I'm biased in their favor, of course, because they're a sponsor of mine. But you got to understand, most day traders lose. When I first got started, I lost thousands of dollars, and it was a lot of money to me at the time. I almost cried. Because most day traders lose. It doesn't matter what course you take, who you follow, most day traders lose. So you could put up thousands of dollars yourself and probably lose it. Let's just be real here. Or you could try a funded account program. If you lose, you're out $50. You still have some pressure because, again, what they do is they give you a demo. They test your skill. If you could pass the test, you know, the base one's a $50K demo they give you. It costs $49, so it's less than $50. If you can hit $3,000 in profit on that $50K demo without losing over $2K, so a 2 to 3 ratio, they fund you $50K with a 90% split. They pay out millions, fund thousands a year, pay out millions in actual withdrawals. I actually got funded on my other account yesterday, and I'll put those stats up here so you can see it. But again, we'll put this up. So again, I did get funded on another account yesterday. And so again, you can kind of see this here. All right, so here's the account I got funded on. Again, I wanted to get funded in 2 days. I wanted to get funded in 2 days, but they had a glitch that didn't let me get traded the next day. So it would have been 2 days, but we got funded in 3 days specifically. You know, interesting here. So average winning trade was about $57. My winning trade accuracy was 80%. 80% winning trades. And so again, my accuracy very high. I already knew that. Again, my system is a high accuracy, like break even risk to reward system. So when we look at this, and honestly, that's pretty solid here. Like, look, so we kept my average winning trade and my average losing trade almost exactly the same. So again, if you want to see, I always, you know, you might hear me talk about my system being a 1-to-1 risk to reward ratio, like high accuracy system. But again, my stats back this up. Like, I can't fake this. My winning trade average is almost exactly the same as my losing trade average, 57 to 57. But my accuracy rate is what compensates for that 80%. And so again, you can kind of see this here. Each individual day I trade it. And you can see my max consecutive winning trades. Like, look at this, 8 to 2, 4 to 2, 15 to 2, 9 to 2. You can see my winning trade percentage, 83% on December 26th, 72% on December 27th, and then yesterday we had a winning trade percentage of almost 83%. And so again, high accuracy, break-even risk to reward system. I hope all that makes sense. It really is how I trade, but a lot of this has to do with building up a cushion first. So a lot of this has to do with, like, I get up in the morning, my goal is to build up a cushion of $100 to $200. If I can do that, once I have that cushion, I'll scale up. But if I don't have that cushion and I lose a couple $100, I walk away. And so I keep it small losing days, big winning days. And again, I got a full video detailing this on, like, how I do this. And so I do have a full video detailing this. If you want to check out the video, I appreciate it if you go to the video, hit the like button, you know, And again, this is a video detailing my system on how to get funded like this. Well, there's not really any course. It's $49 for the to take the challenge. Yeah, 4 to 5 days is much easier for sure. Can you teach me how to trade so I can get funded? I mean, I'm not claiming to be an expert or a guru or anything like that. Just basics. Yeah, I mean, I haven't taken a withdrawal yet, but I'm profitable. I've had my 5 winning days. I'm just letting it build up a little bit more. Specifically, I want that 5,000 payout hat or banner, so that's what I'm waiting to do. But again, you also have to understand my bias is that, like, I don't need to get funded. Like, my TOS account has got 50, 60K in it. And so, you know, I don't need to get funded necessarily. It's just something in which I'd like to do. Or I don't need to take the withdrawal, you know what I mean? But I think for most people who don't have the amount of equity that I have, it makes tons of sense. Yeah, again, guys, like, my big thing here, I'll show you guys some of my strategies, but I'm going to preface it with that I'm not an expert. I'm not a guru. I don't claim to be a good trader even. These are just my own personal strategies that I use. I can't guarantee they're going to work. You know, I can't guarantee any of that stuff. And you always got to figure out what works for you. Everybody's different. Now, with that said, you know, it depends on what part of the day I'm in. If I'm in the very beginning of the day, usually the strategies I'm using have to do with, like, scalping trends to build up a profit. Like on my funded account today, I haven't really traded a ton, but you can kind of see we're up $65, almost $70. Got a little cushion to start the day. And so my first thing every morning is building up that cushion. Like, I want to build up a cushion first. That's my main goal, is building up that cushion. Once I build up that cushion, I'm scalping trends like this. So like an example of a trend, you know, because I'm looking for the highest accuracy setup. That's how I have that 80%. So an example of this trend would be something like this. Like, if you look at this, and it might be a little bit better actually on a Quant Tower. Might be a little bit better. Yeah, so like an example of this trend, just to put up Quant Tower here on my funded account, would be something like this, right? And so when I say I'm scalping trends, usually it means something like buying the bottom of this range, shorting the top of this range, buying these little dips, riding a quick little bounce, buying these dips, riding a quick little bounce, shorting once we get to the top of the range. And so I'm just kind of attacking this trend. You can also see another little mini trend here as well, to be honest. And so I would do something like buy this dip and then ride it back up as it happens. And so it's identifying micro trends and attacking that short term. You know, and if I could build up a cushion doing that of a couple $100, then I'll take a little bit more momentum-based trades closer to the opening bell. So that's kind of what I do. But yeah, just simply identifying trends is what works the best, in my opinion. Sometimes it works better than others. But again, if you look at the strategies I'm using, I use a mix of that. Plus, towards the opening bell, I take a little bit more momentum-based strategy. So I'm looking at more so ranges, breakouts, stuff like that. And again, I'm certainly not telling you to buy this. I don't know if this is going to work. I'm just trying to give you guys an example of what I do. I'm using the volume weighted average price a ton because, again, you can kind of see how much stocks are influenced by the volume weighted average price. Like shorting the VWAP here at the top of the trend makes sense, waiting for breakdowns under the volume weighted average price and then attacking that weakness to the downside. There's a lot more. Yeah, definitely top 3, Bruce. All right, thanks, Hayden. More cushion. Yeah, for sure. Yeah, I mean, Jolly Top Step pays out millions every year in actual withdrawals. They've been around for over a decade. They're the most legit one in the world, in my opinion, If y'all use one of those smaller ones, that's probably when you're in trouble. Yes, JT. Yeah, I don't have a mortgage. All right, so we're down to 400.4. We'll see what the Q does. I'm watching the Q. I'm watching Tesla here. I'm not sure. And remember, we got the Jolts report at 10 a.m. ISM manufacturing PMI also at 10 a.m. All right, team. Yeah, I mean, that's not true, Corey. It's actually pretty nice here. Now, it's much better than, say, again, other places, but it depends. Homes are pretty cheap here. Again, I'm very politically neutral, but Texas is very nice. Homes are cheap. The amount of home you get relative to the cost is much better here. Like, for $1 million here, you're getting a man. Depends on where you go. But for $1 million here, you get a very big house, very nice house in a very nice neighborhood. Compare that to like Cali, where you spend $1 million, you're getting a little shack. And it's really nice. The job market is good. There's a lot of jobs in Texas. I'm not sure why people hate on it so much. Like, politics out, you take politics out of it. Like, it's a nice place to live. And I'm from Louisiana originally. But I think people get biased politically, and so they end up just, trying to argue for their higher, I don't know. So Jolts is good for markets. It doesn't mean good. Jolts influences markets. Now, how much, we don't know, but Jolts will probably at least influence it to a certain extent, mean, I don't see that much here, Robert, you know. I mean, I'm sure it happens, but I don't know. Well, any big city is going to be rough in some areas. Like, it's the same thing with Los Angeles, with New York, and Houston, of course. Any big city is like that. That's just kind of inevitable for a big city. Doesn't matter what state. Any big city is going to be rough. That's just kind of how it goes. Data comes out at 10 a.m. 10 a.m. Dallas is really nice and growing quickly, too. Dallas, Austin, both are very fast growers. All right, so Tesla now underneath the volume-weighted average price. Microsoft up to 368. Oh yeah, Michigan's probably the most. We travel to Michigan a lot for vacation. Like my mother-in-law owns some property there. I'm not gonna be specific about where it is, but we travel to Michigan a lot. Michigan's rough, you know. Like Benton Harbor, you know. Michigan's rough. Coin is up a ton, man. Down today though, but it's crazy. Coinbase is all the way up to 146. It's had some crazy runs here. Those are big moves. Yeah, it depends on what crypto does. I think a lot of the reason Coinbase is up is because of kind of front loading into crypto with the potential ETF approval coming soon. Yeah, I have to check out the conditionals here. Weird. On toss or call or put options on the right. I think they're put options, right? Weird. Let's take a look. Today gold. Yeah, where's gold at? I see Coinbase. Oh, never mind. I see the puts. Okay, so puts are on the right. So we already had Redbook, I'm pretty sure, come out. Redbook came in, mortgage rates went down a little bit more. If I remember correctly, I think the Redbook already dropped. Or no, maybe not. I'm sorry. Yeah, today we got the FOMC Minister report, Jolts, Barkin speaking. So a lot of stuff going on today. Yeah, I'm not hating on Michigan. I like Michigan, honestly. It's a beautiful place. It really is. A lot of farmland. But there's also some rough places, like Benton Harbor is rough. Detroit, obviously, very rough. One of the roughest cities in the country. And so I'm not saying it's good. You know what I mean? Or I'm not saying it's good or bad. I'm just saying it's got some areas. And again, I visit there a lot. Like usually once a year we go visit. Yeah. I gotta be honest here, team. I'm thinking about picking up a Coinbase put option. And I know we probably got some people that are upset about that. Again, you gotta understand my logic here, team. My logic of this is I think it'll probably not work. I think Coinbase is probably not going to go down relative to the ETF application approval. But if we do get that rare instance, risking $500 or $600 on that downfall makes sense. I think it makes sense. So like, if Coinbase, if we end up going down, say the application gets delayed or rejected, it can be low risk, big reward. I'm risking $500, so it depends on what your definition of low risk is, but I think it's possible. What do you guys think? Redbook, is it out? All right, we're about to hit 9 a.m. Still waiting for the Jolts report in about an hour. Yeah, so Redbook came in at 5.6%. It's a sales weighted year over year, same store sales growth sample. So much higher than last time for Redbook, which might be seen as a negative for economic growth, but yeah, it depends on how much Bitcoin has bounced back. Let's see. Yeah. I'm debating on whether I should do it. Yeah, I could trade more. So we did just get a big dump for the Q. I'm trying to see what stock it was. I'll consider Coinbase puts at the open, but I gotta wait until the open to buy it. So the Q just broke under. We're still above 400 though. All right, so we are getting a move up here. Watching my funded account. See if we flush down a little bit here. Give me some profit. All right, so we are short here in our funded account. I'd like a little bit more of a breakdown here if we can. Man, look at Tesla rip. See, that's the only problem, is that Tesla rip might drag the market up. But look, there we go, 60. I got a nice little room here, though. Jolts comes out at 10. All right, so we just made a little bit more. So there we go. We are up about $100 on the day. Got a nice little cushion. Again, what I do here, another one of my strategies, guys. So we had people asking about my strategies today. So I'm going to go ahead and show this. I call it the piggyback strategy. All right, I really call it the piggyback strategy. What it means is that when I'm attacking momentum closer to the opening bell, it's usually always closer to the opening bell. When I'm attacking momentum, I try to piggyback off of larger moves. And so when I see some really big red action here, right? You see these big red candles. Here's a big red candle. Here's a big red candle. Here's a big red candle. When I get some really big red candles, I look to piggyback off of that move. And so instead of just kind of blindly shorting into all this and looking to catch an extended move down, I instead look to piggyback off of that move. And so what I mean is I look for big weakness, and then I attack a small bounce, and I short into this pop and look for a breakdown to the downside. That is something that I scalp very often. And so what it usually entails is big downward move, small bounce back, that I enter my short position, cover on the downside. You know, cover as it pushes down. Usually quick scalps. And that's how I build up the cushion in my accounts on a regular basis. So again, we got $100 in profit again today. Nice little cushion so far. And we also have the trend. And so again, you also have the trend system that I talked about earlier. You can kind of see the same trend that we're looking at and how I approach it in that way. So far today, we've got a 3-to-1 win-loss ratio. Yeah, I don't want to mentor anybody, bro. Sorry, dude. I mean, yeah, I mean, you can, I mean, I don't want anybody to copy me. Y'all got to figure out what y'all got to do yourself. I don't want to be another day trading guru, man. You know, like most of the time what that entails is like, I don't want to pretend to be better than I am and start charging people to mentor. I'd rather just give everything away for free, not claim to be good, and just, you know, not have any pressure. Pressure kills profit. It really does. Like having too much pressure on you kills profit. And so I want to keep myself with as little pressure as possible. Yeah, gold down to 2050 today. You know, I also use with that strategy I just talked about, I also use the volume weighted average price. And so another thing that influenced my bias on the short side was I saw the Q break down under the VWAP here. So when that happens, basically when we get a downward trend, a breakdown under the VWAP, you know, a significant breakdown under the volume weighted average price, as well as the big piggybacking type of move, you know, usually we get a little bit more edge there, if that makes sense. Fed Minutes is at 2 p.m. Eastern Standard Time today. We're going to be streaming it. So we'll stream it live. Ten-year wants to go over 4%. Yeah, it's at 3.98% right now. It's getting there. If your children ask you to mentor them to day trade and long-term invest, would you? Yes. I'd probably discourage them from day trading though. Yeah, it's not a press conference, though. Today's just the FOMC Fed minutes report. So it's not an actual press conference. It's just a report that goes live at 2 p.m. that we're going to stream live like we always do. But yeah, it's not an actual meeting. It's just a report. All right, guys, get ready. We got Jolts. We got the NASDAQ breaking down. So we're not debuting rates. Nice. I hope you get good enough. I hope to get good enough to educate my kids one day. Yeah, for sure. Good luck, bro. Yeah, I mean, I'm gonna teach my kids the understandable thing to teach them first, which is investing, right? Which is that, hey, get money, stick it in the market. You know, you'll appreciate. Your money will appreciate over time if you let it sit long enough. And so always start adding to that and DCAing and just kind of scaling into long-term investments over time. It's one of the biggest things that the public misses out on, you know, and they mostly miss out on it for like reasons of like greed. You know, greed makes people miss out on a lot of gains. And what I mean by that is like people get greedy. They think the S&P 500 is too slow. And so they end up just looking for other things and joining pyramid schemes and like all this other nonsense, to where they don't actually stick any money in the S&P. And then 5 years goes by, 10 years goes by, and they would have turned, you know, 10K into 50, 60. But instead they went chasing waterfalls, you know. Yeah, good luck. Tesla sideways. Look at the Q test lows here. So here's the lows on the Q. This is actually the low. So again, we got this big move to the downside here. You can see it. I don't know if we're going to hold or what, but we got that big move. Remember, at 10 a.m., we got Jolts. We got ISM Manufacturing PMI. Tomorrow, we got non-farm employment change, S&P Global Composite PMI, and jobless claims numbers. And then Friday, we got unemployment, non-farm payrolls. Unemployment expected at 3.8%, going up 0.1% versus 3.7% last time. Is what they're expecting. It doesn't mean we're going to hit that, but that's what they're expecting. Bonds are shooting up a little bit this morning as well. Oh, man. All right, so again, we're testing the lows now. I don't know if we're actually going to break the lows. Bouncing up a little bit. Part of me wants to short, kind of betting on, again, the piggyback kind of sentiment where we have this big downward move, then we get a small bounce back, then we short into that small bounce back and look to at least retest lows is kind of the system I use a lot of the time. It doesn't mean we're actually going to do that, though. Again, don't copy me. I have no idea what I'm talking about. I might be wildly wrong about anything and everything, but that's kind of what I'm looking for right now. I don't know if we're actually going to get it. It's also very possible, again, that we just end up continuing to bounce back up and not coming back down and even retesting that level. It's certainly possible. Why is the market red? I mean, there's no reason. The market doesn't need a reason. Sometimes the market's just red. So market maker just shorted 1,200 contracts at the ES lows. All right, Tesla under the volume weighted average price. You know, you see the Q here on the top right. So we had that little bounce back. It wasn't enough to short it, but then there's the break of this low. Look at the Q break lows. Wow. See if there's a reason. It could be, is Barkin speaking right now? Is that what this is? All right, so we're short again. It's just too big of a retracement for us not to follow back down a little bit, I think. Let's see. We got a cushion, so we don't have to worry about it too much. But there we go. Flat right now. All right, so we just made about 15 bucks. Small little scalp here. We're up about 110 on the day now. Probably could have made a little bit more, but we're getting close to the open, so I'm just kind of scalping momentum at this point. Bro, talk about Jolts effect in the market. Well, it depends on what the Fed and the market is fearing. You know, if the market's fearing inflation, probably wants a lower Jolts number. If the market is more so fearing a recession now, especially with these latest turnarounds, then we might be back to good is good and bad is bad market versus what we've been in for the last few years, which is bad is good and good is bad. Basically, economic growth has been seen as a negative over the last year or two because of inflation fears. Basically, the faster the economy is growing, the more spending that ultimately happens, and the more spending that happens, the worse inflation gets, because when people continue to spend, businesses continue to raise prices because they can. And so with that in mind, we are in a situation now in which the market is pulled back about 3%, and it could be pivoting to where a more good is good and bad is bad situation, where economic growth is considered positive and economic weakness is considered negative, kind of more back to true convention. Again, I'm not saying that's what it is, but again, I think with this Jolts report, it'll be an interesting nuance to watch for it. And with that, I really don't know what we're going to show up as. I don't know if the market wants good or bad numbers. That's why you can see our poll today. We specifically stated, will the market react positively to a higher than expected Jolts report? 58% of people say yes, 42% of people say no. And so again, it's an interesting nuance of the market in which we're going to see what the market's really fearing right now, whether the market's still fearing inflation in such a heavy way that economic growth, i.e. more job openings, are seen as a negative, or if the market is back to normal and where economic growth is a positive. We'll see. Let me know what you think in chat. Part of me wants to short this as well, though. All right, so we're short. We got a cushion of $100, so we got a little bit of room. Let's see if we break down a little bit more, start flushing, which is what we want, of course. Slightly green. There we go, break down. I just made another little $30. Again, we're kind of scalping right now, of course. We're scalping here. We're up about 150 on the day now. Got a nice little cushion heading to the open. Win-loss ratio is 5-1 this morning, 5-1. So we're doing pretty good in that regard there. About 80% accuracy today so far. I think inflation is done, mostly getting value away from tech. Maybe. Again, I'm not saying I agree or disagree with any of this stuff, but all right, we got a nice little bounce back here. Part of me wants to short into this again too, but I don't want to get greedy either. I'll just wait. And again, if you haven't already, check out Top Step. This is a funded account program in futures. All right, we just scalped a little bit more here. Very quick scalp. And again, you can see I buy market, sell market, buy bid, sell the ass, just like stocks. But there's no PDT rule in futures, so I can day trade the NASDAQ, which is QQQ price action, the same price action. You can see the Q on the top right, and this is basically this zoomed in. But I can trade this left side futures, no PDT rule. Top Step's the most legit funded program. They are a sponsor, so I'm biased, of course. Because they pay me money, but it really is useful to learn how to trade, and if you're good enough to pass it, you can get between 50 to 150K in funding. If you're not good enough to pass it, you're probably going to lose more putting the money up yourself. Most traders end up losing their first few accounts, and so it doesn't make any sense to put up thousands and probably lose it. You can limit your risk here. If you pass it, you still get a 90% split, but if you don't pass it, you're only out $50. You still have some pressure to succeed as well, so it's a really good like middle ground of pressure. So again, if you want to check it out, here's the link. Again, remember, they are a sponsor. I'm biased in their favor, but check them out. We'll put this number up about the Jolts report. Yeah, so again, Jolts drop at 10 a.m. along with ISM Manufacturing. Yeah, I still got my beard. I've been keeping it a little bit shorter than normal, but I still got it. All right, so we got this pop. Part of me, again, wants to short it. That's my bias here. I'm going to go ahead and try. Got to keep it tight, though. Oof. That hurts. Oof. Goodness, man. Worst case scenario there. Yeah, I'm going to go ahead and get out there. Now I'm completely flat on the day. That sucks. Man, dude, that one bounce rip up. Look at this candle, man. I got worst case scenario. That's the biggest candle that we've had all morning. I just got caught in the worst candle we've had all morning. Oh, it hurts. It hurts, guys. Again, luckily, though, we're completely flat. But, man, that happened out of nowhere. Definitely top 3 worst candles ever in the world right now. Yeah, it's all good. I can make fun of myself, but man, that sucks. And then a big rejection down too. Weird. This is some type of maybe catalyst release. I'm not sure. I'm looking at news. Is Barkin still speaking, I guess is the question. Look at the whole dump down too. Luckily, I had built up a cushion on the day, which is why cushions are important. But man, what a turnaround here. Very strange. Alright, well, we just scalped the regular E-mini and made it right back. Not all the way back. We're up 120 on the day now. Maybe took a little bit too much risk on that trade. I'll probably wait until the opening bell now. Yeah, I was 10 seconds too early too, unfortunately. My momentum was right. It just pushed up. And I think market makers do that intentionally where they push you up, stop you out, and then go in your direction. It's one of the reasons proper size is important, because if you're taking too big of size, it'll really affect your mental game where, like, say you're taking really big size there and it pushes you up, and so you get nervous and you exit, and then you have to watch it come all the way back down, and then your mental game is shot. That can happen a lot, you know. Part of me wants to short this too. All right, so we're shorting again here, guys, but we're starting to open up our trades a little bit more closer to the opening bell. Big momentum, though, really. We might open up and start trading the regular E-mini, too, if it gets closer to the bell, if that's going to give us some more reasonable. All right, so we're out. And so, yeah, we're back up to about 150 on the day. We're basically where we were before. But, man, just kind of volatile action ahead of the opening bell. Closing price of the last FOMC. I watch UVXY, inverse volatility ETF. Yeah, maybe. Yeah, I mean, I only really trade big when I can, when I have a cushion. And so again, we're back. My drawdown on the day is a little bit higher, but it's about 1-to-1, which is my intention usually. So again, we're up 150 again on the day or so. Again, maybe a little bit more, a little bit too loose after that loss, you know. But again, mental game will mess with everybody. Yeah, no, I don't usually trade the first 5 minutes. So guys, remember what I said my idea was? Which is that, like, okay, if you guys remember me breaking down the strategy, I said we have a big move down, we get a small bounce back, and then a retest of the lows. Now, this was a little bit higher than I was expecting it to be. But again, this is a pattern that you see over and over again, to a point where I can literally call this 45 minutes ago and the same thing happens. Although, again, to be fair, it did push up a little bit more than I thought it would right there. But this is something that you see a lot. I call it magnet, like the high and low of the day magnets. What I mean by that is, like, once we form a consistent low, that level's kind of like a magnet. And so if we move down to test it, like you can see the low here, we move down to test it here and we bounce back, the stock has a higher probability, in my opinion, of coming back down and at least retesting that low. Certainly higher probability than it going back up and doing stuff up here. And trading is all about probabilities. And so what I like to do is I attack those magnets. And so again, I look for a big move, piggyback off of it, look to cover around the low. This one, I didn't quite hold it long enough. And really, I'm going to start waiting for the opening bell to take any big trades. But I hope that makes sense. It's kind of like, I think it's just psychology of trading, where it's kind of self-fulfilling, where you test a low, bounce back up. The stock or security or symbol, whatever it is, usually wants to retest that low. And so it's kind of like a magnet. It's even more so around big milestone levels in that regard, where it's like big milestone levels have even more of a nuance like that. So at 10 we have economic data, Saeed. So at 10 we got economic data. So it's the Jolts job report. It's job openings. It's signaling the labor market, which Fed Jerome Powell has stated many times it is one of the biggest obstacles to hitting the 2% inflation goal over time. Is the labor market has been too robust. Basically, too many people are working, and in turn, too many people are spending, making inflation worse. And so what's relevant today is the Jolts job report, which signals the labor market and how strong or weak the labor market is. And so again, it might be a nuance in which a higher than expected Jolts report makes the market go down, or we could be back to convention in which a higher Jolts report signaling economic growth, more jobs. Again, a higher Jolts report could mean a positive reaction. We don't know yet. Lately, over the last year and a half, it's been kind of backwards, in which economic growth is seen as a negative, mostly because, again, what Powell says is that the labor market is too robust, and it's an obstacle for the U.S. hitting the 2% inflation goal. No, numbers aren't out. Hey, thank you, Saeed. I appreciate it, man. Yeah, we got 2 minutes, minute and a half now. All right, so we're bouncing up a little bit on Tesla here. We're bouncing up over the volume weighted average price. The opening bell is in 1 minute exactly. I'm still kind of bearish here because, again, I think a lot of the time we test lows, bounce back, retest. Sometimes we break down and start doing it again, like that kind of. But that's just my own bias. It doesn't mean it's true. No, it comes out 30 minutes after the bell, Heisenberg. I don't think I would call this blood in the streets, Roger. You're referencing the stock market quote. You can watch the news live right here. Look, read below me right here. But yeah, you're referencing, I think, was it Warren Buffett? Was it Buffett that said the time to buy is when blood is running in the streets? One of my favorite stock market quotes, because that's kind of how I trade. I look for big extended discounts. I'm kind of a bottom feeding dip buyer. I look for healthy companies to be down big, and I buy them up and sit. Works really well. In all honesty, works really well. I can't guarantee it's going to work for you. Don't sue me, but it works really well. There's the opening bell. I don't think blood is running in the streets yet. All right, so look, what I said exactly did happen. Look at that. Retested the low. And where a lot of people are trying to short here and ride a low of the day breakout, I think that's usually really risky. I usually short here and then try to cover around the lows and then rinse and repeat that if I can, you know. But anything could happen, guys. I don't know what we're going to get. All right, so there's the opening bell. Look at Tesla. Tesla bouncing up a little bit. When Potter is trying to buy, when everybody's panicking. Harry Potter? Kid Lightning? All right, so we're bouncing up a little bit, team. Again, this is why I cover. A lot of people attack these low of the day breakouts and breakdowns. They try to short here and write it down. You get faked out so much. Like, it's unnecessary. Instead, range trade it. Like, look, you short here or here, like I've been mentioning here, and you cover it around the lows. Because this is when most experienced traders are taking profit. Like, it's the bottom of the range. That's where a lot of experienced traders are taking profit. Again, we're going to let things settle down a little bit before we take trades, but oh, Rick Potter. Okay, gotcha. That's who he's talking to. All right, so again, we're moving back up. Again, kind of sideways trend for me right now. Look at Tesla dump, though. Tesla falling down, looking weak. This might drag the market right back down, too. It depends on what the NASDAQ does and what NVIDIA specifically does. NVIDIA moving up a little bit. Let's watch Apple, too. Apple being very strong on the day. So we got Apple. Tesla breaking down. Apple moving up. Sorry, guys. I don't know what I just did. I guess I accidentally left the stream. I don't know what I clicked, but we are back. My bad, guys. We're back up. Market's testing that low level. Look at Tesla break down here. Tesla breaking down. Look at Apple rip up, though, so it's really interesting spot. Look at the Q break. Apple. NVIDIA. NVIDIA's trying to move up a little bit. Part of me wants to short this, though, but we're only 3 minutes after the open. Watch NVIDIA, watch Apple. What's with everybody saying F? Did I press F or something? Did I accidentally press something? Oh, okay, gotcha. Call of Duty reference, okay. Yeah, I know my screen went out. Tesla's still dumping, though, but Apple and NVIDIA both ripping up highs. So, and again, I'm in Apple right now, actually, so I added to my Apple position earlier. Look at Apple. Look at NVIDIA both rise. Apple is the one really skyrocketing up, though. Look at Apple here. I'm going to put Apple in the top left, or the top right, I'm sorry. Look at Apple. Wow. Apple going green on the day. Tesla going red on the day. Okay, when something happens, people spam F. Gotcha. Man, look at the market rip. Apple testing the previous closing price. NVIDIA very much bouncing back some here. Still got a ways away, but too choppy for me personally here. I don't see any setup right now. I'm short, although this is kind of a risky move. This is a very risky move. Yeah, I'm gonna have to cut that. So we just lost. We're down on the day again. We're down 40 bucks. Super risky trade. Look at Apple. Apple hasn't had one red candle today. Not one since the opening bell, that is. NVIDIA flying up too. I don't know what's going on. It's tech mostly. It's not the S&P. Big turnarounds though, man. Like, look at the S&P move. So the S&P is down. So this is mostly tech. Right, look how down the S&P is. Big upward rip at the open, but man, look at the NASDAQ. Look at Apple try. Trying to go back up. Let's see if it holds. Apple's coming all the way back down. Still just kind of sitting tight here waiting now. Let's see if Nvidia starts to bounce back. So we're bouncing back here. Let's see what Apple does. Sideways day right now, so kind of boring here. Apple is pulling back though. Yeah, we're so sideways right now. Market's trying. Nvidia's still trying to pump. Tesla's consolidating sideways. Nvidia's starting to rise. See, watch Apple though. Apple hitting 185s. Let's see what it does there. Very neutral. We got Jolts coming out in 20 minutes, so maybe we're sideways until Jolts. See if Apple bounces and what Tesla does here. Very neutral day right now. I mean, it's kind of boring. I'm looking at Nvidia. Nvidia almost up to 480s. 10 a.m. is in 20 minutes. 10 a.m. Eastern Standard Time, team. We're starting to get some green action here. Again, Apple bouncing a little bit at that previous closing price. Very choppy. I think the whole market's kind of waiting for this to happen, though. You know. Look at Apple break all the way back down. Yeah, my equities portfolio is definitely red today. But it's just kind of small red in every stock that I'm holding. Hello, my friend. It's cool that you're back. We been back, bro. So yeah, we've been back, brother. Yeah, we're down a little bit on the day now. Yeah, the whole market's kind of waiting for the Jolts report team. That's all we're doing. Extensions definitely. Look at Nvidia. Nvidia ripped up, guys. This is what's dragging the market up. Nvidia moving up. So yeah, Nvidia just broke highs here. Look at Nvidia on the top, on the bottom right. Lots of choppiness. Yeah, again, we're just kind of sitting tight. The market, I forgot the Jolts report was coming out today, and so the market's probably a little neutral in that regard from this report. Waiting for this report to drop is kind of what's going down, I think, you know. Look at Nvidia still ramp up towards highs. Nvidia still trying to move. There's Nvidia testing the previous closing price, still moving up. All right, we got 15 minutes still until the report goes live. See if the report goes live and helps the market. Again, it's an interesting nuance of the market where we don't know if a good report or a bad report is going to help the market, if higher or lower Jolts numbers influence the market in a positive or negative way. We really don't know what the market wants in that situation. And again, we're just kind of sitting back waiting for the report now. Again, we'll see what Apple does. Apple initially had a good upward move, and it's starting to fight back a little bit now. We also have Nvidia testing the previous closing price, so Apple heading towards going green on the day, and Nvidia getting up there. Nvidia is getting up there, so again, we're getting close. We want to see what we get here in markets, but Nvidia's trying, it seems. All right, look at Apple. Apple at 185s over the VWAP, over the volume weighted average price. Still sitting here waiting for the report to go live. The E-mini is barcoding, unfortunately. Yeah, let's take a look at this one. Here's the NASDAQ. Still trying. We're switching to one of our combine accounts to play with. And I like this trend. But yeah, again, this is a combine account, so we got a couple of these. So we got 13 minutes to build up a cushion. Let's play with it. All right, so there's $100. We got a start of a cushion. We got a little dip. We're going to plan to scale into this next one because Apple is now over the VWAP here. See what we get. All right, scalping out of this. Scalp. There we go. Ugh. So we're up about 3. Scalping this. We're getting towards the top of the range. Same concept. High of the days are kind of like a magnet too. Yeah, so there's the high of the day test. Yeah, we watch the news, bro. All right, so we broke the highs. I don't know if I like this or not. Again, we got about 11 minutes until the market opens. All right, so we're going to add towards that low. A little bit extended of a dip buy, but it's all right. We just want to see if we pop back up and scalp it, but fix our average a little bit. We're taking a larger risk. Again, this is a combine account. We built up a cushion of $300, and so we can take larger risks and play with this. Again, it's a little bit different than like my funded account, which we're going to be a lot more careful and reserved on. All right, so again, we're going to take our risk here. I actually don't like this now. Let me see if I can exit. I'm going to limit some of my risk and cut a piece of this off. Protect the trade. I'll get out a little bit more there. I just don't like this. Trying to find safe exits though. Yeah, this, I think for this combine account, and this is one we were already down on. We have multiple. I think I'm done, basically. We could try adding to it, fix our average real quick, and see if we could just have fun with it. Again, I got a bunch of combine accounts that I don't use, and so that's what you see me playing with now. We switched from our funded account. Probably over trading a little bit. We might barcode into this report as well. Yeah, I don't know what ISM PMI is going to do. Manufacturing is an interesting look, but again, I really don't know what we're going to get there. Yeah, I'm probably just going to hands off this one and see if we get a big gain on the day. We've already got a, cushion. There we go. All right, scalp. Take a little bit more off. We got 2 contracts left. Take a little bit more off there. Now we might add to it, but it doesn't look like we need to. All right, so we just made about, we're up over 4 now, or around 4 actually. So the plan worked. This is Quant Tower. And again, if you want to check out Top Step with me, again, here's the link. They are a sponsor, though. I'm biased, of course. Sideways / neutral trend. And again, this is watching Apple. Look at Apple push. All right, we're gonna buy this little dip. Continue to ride this downward trend, or this upward trend, I mean, if we can. We're gonna scale into this one though. Oof, that's a bigger drop than I was anticipating, in all honesty. I'm gonna cut half of this off right now. All right, so we just made it right back, so we're kind of flat on that trade. But man, I do like the downward pressure actually. There you go. All right, so we just made another 75. Again, we're scaling in, so you see me enter my starter position. And then if we move up, we just take profit quick. Big downwick, though. I don't trust it. Apple is kind of what's dragging this. We retrace back down to here. I might buy some more and look for a test of those highs. Too late. Oh, well. 4 hours of sleep is certainly not enough. I need 7 to feel okay. Like, I need at least 7 hours of sleep before I feel normal. Like, if I get less than 7. All right, team, so all right, so we're trying to get these live. Let me see, we'll get rid of that. We got the Jolts report. There we go, we'll save that. All right, we got a big dip. We're gonna go ahead and buy this dip. Scalped it out of that. We are now up about 5 on the day on this account. Here's this account. Five minutes. Again, we got a big cushion. We can take a big trade now. We'll look to add to this if it curls. Scalp half of that off. Still got 2 contracts left. Take another half of that off. Gonna maybe add some more to this since we've got $600+ in cushion. Try to get a big $1,000 plus win on the combine account. See, Nvidia is what's turning though. That's not a positive sign here either. So I'm gonna take half of this off right now and then get out there. I don't trust this right now. Nvidia is turning. You know, when the report comes out in 4 minutes, I just don't trust it. So we're gonna limit risk and scale. Yeah, so here's this one. Again, we're up about 5 so far. 2.8 to 1 win-loss ratio on this combine account today. Yeah, and so look, there's the pullback. So I spotted like a nuance of it that I didn't like for longs, and I cut it and got out. Perfect exit there. Very minimal loss versus what this could have been. Look how big this drop is. So again, we avoided that completely. Yeah, I was watching Nvidia, Tesla, and Apple. They were all showing weakness, pushing under VWAP, and so I don't want to mess with that here. Yeah, I need 7 hours at least. I don't know. Sometimes I'll wake up getting 6.5 hours and I'll feel good. Most of the time, though, if I get less than 7, I'm feeling rough. So I have 3 funded accounts, Polaris. I've already traded my Express or my funded account today. The reason I'm the way I see it is like I can build up a combine and have it really close to funding, and then be more comfortable taking large risks on the other funded account programs that I haven't messed with yet. That way, if I end up losing there, I can just kind of quickly get funded on my other one and not have. It's all about limiting pressure that I have on myself, is what it is. Like if I only have one combine, or if I only have one funded account and that's it, and I know if I lose that, then I got to work and build another one up, then it's going to be more pressure. I would rather limit that pressure, and if I have challenge accounts ready to get funded within like a $200 profit day, then I know I can take larger risks in my funded account and really build up those cushions and profit. All right, 2 minutes, guys, 2 minutes. All right, we're also going to throw this in sub-only mode. If you haven't already, hit that sub button. We appreciate the love. Thanks so much. Remember, today we got the FOMC minutes report going live at 2 as well. Yeah, my stomach is in knots today, man. I don't know what's wrong with me. All right, guys, a minute and a half. All right, we got about a minute left, team. A minute left. Again, announce yourself. Show us that you're subbed. We appreciate it. Let's see what happens here. Got about 700 people here live. We still got over a minute. All right, here we go. Good, nice little bounce back. Again, you can see the market's been mostly sideways and choppy. Leading up to the Jolts report today. So again, let's get ready. Hit that sub button. Again, guys, we cover all these big reports daily. Again, today we got the Jolts report, ISM manufacturing PMI data here. So be ready. We got 20 seconds. All right, here we go. All right, here's the report, guys. Hit the live button next to the play button. Make sure you're fully caught up. Let's do this. Here we go. 5 seconds. Hit the live button. 8.85 million is what's expected. All right, so ISM came in higher than expected for manufacturing PMI, higher than expected. The Jolts report's not actually out yet. Jolts came in lower than expected at 8.79 million, 8.79 million, lower than expected. And initially the market is pushing up, again, lower than expected job openings, signaling less economic growth, less jobs, and markets ripping up again. So we're still in a market that's fearing inflation. ISM manufacturing PMI came in slightly better, but Jolts came in lower than expected. And again, the market is ripping up, signaling a market that still is fearing inflation and doesn't want as many jobs. We'll put this number up on screen as well as the ISM PMI data. But again, ISM PMI data was slightly higher. Jolts were lower than expected, again, signaling a market that's still fearing inflation. It doesn't mean it's going to hold in this way. We're just looking at the initial reactions here. You can see the number for Jolts right there in the chat. Put this number in chat as well. All right, initially a positive reaction here. All right, so another turnaround here, but again, Jolts came in. All right, so again, are getting a complete rejection here, which to me looks very weak. All right, we're going to add to this here. So we have this cushion built on the day already, although I don't want to hold in this. Sideways. We've gone up big, down big, back up, and we're going to have to cut that. So we just gave back all our profit, unfortunately, on that combine account. Now we're down 227 on the day. So again, I see somebody saying, questioning my logic for switching to a combine account. One of the reasons is so I don't end up doing what I just did on my actual challenge or at my actual funded account. So I can trade something, still have something to work towards, but not give back all my gains. That's one of the main reasons. Hey, nice, Justin. Congrats, brother. Yeah, again, we're back up. Very weird market action today. Very weird market action. Watching the S&P. Market looks like it wants to go up on the Jolts reported. We did have less jobs, which is good, I think, right? Market's so choppy right now, though. It's just not really doing anything like good. All right, Nvidia bouncing directly off of that VWAP level. All right, look at Nvidia rise all the way back up to 480. And again, like I said, if you haven't already checked out Top Step, funded account program and futures, you can try to get funded in the futures market. There's no PDT in futures. If you try to trade stocks, you're going to be severely restricted by the PDT. The reason these funded account programs are useful is because it limits that. Great way to help support the channel. They give you a demo, test your skill. If you could pass the test, they fund you. If you fail the challenge, you're probably going to lose less than you would putting the money up yourself. Again, no PDT rule on futures. You can day trade short. The S&P is basically the E-mini is basically the SPY price action. The NASDAQ is basically the QQQ price action. But there's just no PDT rule in futures. So you can do it as much as you want. And again, you can check out the link in the description. We're going to be back later on today. Remember, we do have... Again, we're going to be back later on today. Remember, we do have the FOMC minutes report. So we do have the FOMC minutes report going live at 2 p.m. today that we will stream. Your market looks like it wants to move up. So we ended up making our money back here, but we're kind of going back and forth. You see, we're up 320 or so on the day. I don't know if I'll trade anymore. Fed 2% inflation. Yeah. Again, I guess I'll trade some more, but it looks bullish. But I'm watching Nvidia and Tesla closely here because they were the ones that were pretty volatile. Microsoft's still doing okay today. Still technically green on the day despite pullbacks over the last few days. Again, Apple was green for about a minute, and then it rejected that previous close and came all the way back down. Tesla very red on the day still. Tesla will be fine. Yeah, I mean, Tesla's up so much. So the Jolts job openings are how many jobs are opening is basically what the name suggests. say I'm running and hiding? Bears got crushed. Yeah, I mean, the market ended up flying up. It's definitely not going down. Again, I think people are just emotional, man. And I think there's a lot of egos that float around in the market. Like, a lot of people want to be right. They really want to be right. And so people who claim that last year would be some type of really weak year, and then we end up, going up, what, 24% last year. I think that's really hard on some people's ego. And so I think if I'm one of those guys that was like, hey, the market doesn't have to crash, the market can be bullish, and then I was correct about it last year, I think that kind of rubs people the wrong way. I think people kind of sit around waiting for me to hopefully be wrong so they can attack. And again, that just shows emotion, and it's all good. It doesn't matter too much. Take whatever predictions you guys want. It's all love, Yeah, I made most of my money shorting today too, we mostly shorted trends all pre-market. That's how we made money. I'm looking at Tesla right now, though. Tesla's the one where I'm seeing if it's going to bounce back. Tesla under 240s. So. But so far, it's just been a really choppy day. So I don't think anybody's really winning today. If you look at the range, the market's basically done this all day. Where'd my pen go? I thought I had a pen. Oh, there it is. Okay, I do have a pen. Like, look. This is the price action today. So it hasn't really been some crazy volatile day. Nvidia's right around the previous closing price, so basically flat on the day. Tesla's pretty red. Microsoft technically green on the day, though. Apple basically flat, pretty close to the previous closing price, which is at 185. It's at 184.50, so pretty much flat. Yeah, the FOMC meeting is what's going to be the big influence of today is the FOMC. Eli says, for someone who says, when in doubt, zoom out, you're not doing that. Check January 1st, 2022. Yeah, I mean, I'm not claiming that the market is super green relative to 2022 and 21 with the pandemic crash. I'm not saying the market's super green from it. But again, that argument doesn't really mean anything because if I can take any type of gains out of context to say that the market's doing better or worse how I want it to be. If I want to act like the market's super weak, I can look at the market over a 1-minute chart and zoom out and say, see guys, look how weak the market is. The market's down a ton. We put the Q up as a better example. I can say, see guys, look how weak the market is. The market's going down a ton. If I want to say the market is strong, I could put last year up. I could put a daily chart up and say, see guys, look how strong the market is. If I want to say the market's weak, I could put a weekly chart up and zoom in and say, see guys, we're basically flat or the market's weak. If I want to be a bullish trader, I could zoom out even more and say, see guys, the market's really bullish. I mean, anybody could take a range out of context to say somebody's right or wrong. We're not painting it with a broad brush though. You know what I mean? We're bullish over the last 12 months, certainly. I mean, that's not really arguable. Over the last 2 years, we're kind of flat. We did have the obvious bearish year. Over a longer period of time, we're obviously bullish. And so again, anybody can take the market out of context to push one specific sentiment, but I don't think it really matters. I think over long term, the market's going to move up. And I think the people I'm kind of trolling a little bit are the people who were saying the market was going to crash right here. When the Q was way down here at 260, everybody was screaming the sky is falling. And then over the last 12 months, we've had one of the most bullish years we've had in a long time. And so, it varies. Anybody can look at it in different ways, and that's the nature of the market. Perspective, 100%. Yeah, right. Hey, market's bullish. Let's look at a weekly chart and zoom out. Market's bullish. Again, anybody can paint it with a broad brush. Again, I could look back at any date and say bull or bear. I could say, see, we're really bearish. Pull up a 1 minute chart and zoom in. Say, see, market's down 3% over the last couple weeks. You know, you can do that with anything. And so bringing up 2022 and saying, see, we're actually break even is doing the same thing on a larger scale. Again, we could say we're actually bullish and zoom out and look at the long-term market over the last 15 years, but it doesn't really mean much. Yeah, I look back at 15 years. Let's look at the market since 2000. Now we're super bullish all of a sudden. So it really is about perspective. It's relative to what dates you're looking at. Everyone's waiting for the FOMC. Yeah, we'll see what the FOMC meeting shows. Again, it's not going to be a meeting. I'm sorry. It's going to be a report. We'll see what the report shows. And these are always really interesting. I know. So Eli says, and again, I'm really not trying to argue with you, brother. I'm really not trying to argue with you. But again, I think you're missing my point, Eli. Eli says, I never care about a specific week. I'm just saying the gains of 23 aren't significant and they offset the losses of 22. Open your perspective and zoom out. Don't focus on intraday. Again, I could do the same thing back to you, Eli. I could say the losses of 2022 don't mean anything because if you look back at the year 2015, you know, the Q was at $100. You know, and so, you know, the losses of 2022 don't really mean anything either. You know what I mean? Like anybody can zoom in or out and take the market out of context to argue a sentiment. You know what I mean? But it doesn't really matter because in the end, it's all like, it depends on what time frame we're looking at. I think considering how bearish people were down here at like the end of 2022, I think having such a bullish, successful year in 2023 is obviously a positive sign. The real question is, what do we do in 2024? Will the rate hikes, you know, rate hikes typically have a lagging effect, especially on like banking, for instance. Will the rate hikes that we've done over the last 2 years negatively impact the market this year in 2024? I don't know. You know, time will tell. We'll see. Yeah, hopefully you guys are making money. I'm going to get out of here and bow out. We will be back later on today, guys, because we have the FOMC Fed Minutes Report that we will stream live like we always do. Y'all be safe. Be good in the markets. We'll be back a little bit later on. Good luck.